Good morning, ladies and gentlemen. Good morning. Welcome, one and all, to the session today, Friday, the 27th of September. This marks officially the last. No, it doesn't. I tell a lie, actually. That's Monday, isn't it? So it's 30 days in September. 30 days in September, yeah. So actually, no, Monday is the last trading day. Monday is the last trading day of the month, which is actually really annoying. It's really annoying. It'd be way better to tie things up today, wouldn't it? But anyway, happy Friday, folks. It is that time again. Sipping down a nice warm coffee. It's currently dark as hell outside, as usual. But no, it's all right. It's okay. Morning, Paul. Good to see you, buddy. Morning, James. Morning, Matthew. Morning, Michael. Morning, TJ. Good to see you, mate. So, guys, yesterday was a bit of a mixed bag. Some of it was okay. Some of it not. We've had some incredible manipulation in the Japanese yen, which took place kind of early this morning, around 5ish. I think it was. No, tell a lie. Actually, got about 7. actually was taking place as I was at the screens already, just not looking at the charts apparently. But yeah, quite big sell-offs here in the yen crosses, and yeah, I mean we can see the sort of the level of these moves is pretty significant. I mean, if we look at the high, I mean the sort of peak here took place at 6 a.m. and then we came down to make this not all time, like the day's low, the day's all time low. I mean, you're looking at a 370 pip drop, in the UJ. It's pretty significant. It's a 2.5% move lower. Really, really big stuff. Look at the pound yen with a larger pip percentage. I mean, the move here is very, very extreme. Incredible move down. So from the high down to the low, it's a 2.54% drop for 500 pips. So if you are a pip hunter, you're probably going to have watery eyes looking at that one for sure. Bearing in mind this drop took about an hour to complete. So yeah, it's a pretty big one. It's not the biggest that we've seen from the BOJ, but it's big enough to certainly stir things up a bit. Now, the pound's been trending up against the yen for a while. The UJ as well has been, it's had a little bit of respite here. Let's, make no mistake. Look at the daily time frame. We had the huge element of chain liquidation here. We've come up. We've got this really big sort of daily bar down. It's had a little bit of a respite, hasn't it? But that BOJ, man, they're definitely fighting the fight at the moment. So in terms of today, folks, we have the major leading economic event this afternoon being the core PCE price index. We have personal income, personal spend as well, which might be an interesting one for you guys to not necessarily look at trading. You're not gonna trade that data, but it is interesting to review. To see where the sort of individuals are in that nation. Core PCE at the moment showing at 0.2, so forecast is remaining stable, same as the prior figure. As I said at the beginning of the week, if we see anything upwards of 0.4 or anything below 0 or anything below 0%, that's going to create pretty significant volatility strikes on either side of the market. Obviously, if we're looking at the PCE price index data being bullish, we are going to probably see a decline in the stocks, a rally in the currencies, and vice versa. So if we see a negative or 0% level PCE print this afternoon, it will be very bullish for our stocks. Now, the US stock market at the moment, just flashing over here. Let's go down. So our stocks at the moment are pretty much very quiet and stable. Yesterday's US session was a complete and utter crap fest for the Dow Jones. Don't know if you guys even bothered. I definitely didn't. Nothing was looking like anything of interest on this one. NAS 100, however, was fundamentally different. The US tech stocks absolutely roared yesterday. Obviously, we had to wait for Fed Chair Powell's speech to finish off. So even though this is the 230 candle, and what a move that would have been, I actually only got in the afternoon at about 3 o'clock and took the falling knife approach to the markets yesterday. But it did lead us to a 1 to 3, which was really something. So very, very happy with that move. Not something I would do on a regular basis. But given the speech and where the overall direction of the market, it just felt like we probably had a little bit more room in the tank. And frankly, we did, because the market actually ended up bottoming out down here at 20k. So it went all the way down, leading to a potential 1 to 6.6, which would have been insane. Obviously, I'm happy with the result of the trade, but at the same time, it would have probably been a bit nicer letting the damn thing go right down to the lows. For those of you who traded yesterday, if any of you did, how did you find it? If no one did, then just ignore that question. Don't worry about it. You caught a 1 to 4.1 on the NAS. Bloody hell, mate. Well done. Well done indeed. Very nice. Oh, sorry, a 1.4 to 1. Oh, sorry, you are right. Yeah, sorry, you put it around the other way. Okay, sorry, yeah, so a 1.4 to 1. Okay, all right, wait. Hey, mate, you're making money. So, no, that's fine. That's absolutely fine. It's not not the 4.1, but it's still good. I mean, it's still money in the bank, right? Caught the second leg down between some of the smaller zones. Missed the first and third massive ones. Yeah, fair enough. And you've had a shocking 2 weeks. I didn't know you had a shocking week the week before last. This week has not been great. This week's price action has not been great. Um, yeah, fair play, Matthew. Yeah, fair play. I mean, you know, on this 1 minute chart here, ultimately looking for inflection points here, looking for breaker structure areas. This seemed like the sort of necessary one. It didn't actually, for me, drop that quickly. I wouldn't have looked at that being like, okay, this is going out of control here. The initial move down from the original breakout. I mean, the breakout candle's this one here, and so we have that move down, and we sat and waited and waited and waited and waited. I mean, this is very, very controlled stuff. And then honestly, this was actually not even a manual execution. This was a pending order. I actually, because of the time of day, I actually stuck a pending in below this area, but was still at the charts. So I didn't leave the screens, but I just had a pending order in here, which triggered nicely. We had this bit of a price action pullback, and that went down, and that was that. We did get this. I was a little bit gutted I didn't get this as well, though. But the time and the day was getting on. It's 6:15 by this point in time. Had the kids here and everything, so it wasn't like I could get easy access to the screens. But this double bottom here, this was really, really nice, because honestly, we're looking for a target profit, right, at the same place that we sort of entered into the last trade. So if that's there as our TP, and we've got perfect access to the trade via this breaker structure, which took place in here. Yeah. So what a beautiful entry, because that is enough to take the trade all the way back up to here. And we also would have had the exact same entry pretty much as taking the breaker structure trade there as well, right? So we would have been then looking at entry, your stop loss wherever you wanted it. I mean, you could have had it there, you could have had it down here, wherever. Target profit was up at that high. So, you know, you probably would have had your stop loss, you know, possibly, I mean, you could have had it about there for a 1 to 2.6. And that was a really solid trade as well. Now, this isn't even something I can say I missed this trade, because I was sat right in front of it looking at it. I just didn't decide to buy back. You know, once I do get like that, I suppose, on personal reflection. You know, if I've done a trade, I kind of just sit back on the rest of them and don't try and aim for any more. But there's nothing wrong with that. That's not over trading. That's just trading. So, yeah. Yeah. Look, at the end of the day, it's all peaks and troughs, right? I mean, there's a lot of instances where if we would have taken the trade, then we would have lost and we would have been eaten into our profits. So it is peaks and troughs. You know, that's the way I see it. It's all good and well looking back in time and being like, oh, you know, why didn't I take that? What was the actual reason there? But at the end of the day, I finished the day up 0.75, just on the US stocks alone. I'm not even talking about the others yet. So that was, yeah, you know, it's kind of all right. 0.75 from US session is definitely okay. Right, let's have a little review then. What's going on, because I know we lost some. We lost a couple, we got a couple. There's not going to be any more forecasts in that for the multi-assets. I'll look at the stocks, obviously, and then I'll post out my US session breakdowns for this afternoon at the relevant time at around 2 o'clock. So yesterday ended up getting a oil long pending order triggered. That was this one here, as per the order book adjustments that we did yesterday. Unfortunately, that one triggered and went straight to stop loss. So yeah, a bit unfortunate, that one. Like the trade, good, you know, solid trade, but yeah, unfortunately it did just go straight down to stop loss, and it kind of continued meandering within the no man's land area for a while here, and it still is currently. So little bit of a shame on that one, but yeah, it is what it is. The gold trade was this one here. So that was our gold price action pullback. So we got the breaker structure for the move down. We came back up. We came back down. And then boom. Now this is quite impressive actually, because look at that. That wick, it wicked into the TP, into liquidity, and then instantly following that wick down, then retraced and went all the way back up to 26.78. It is currently trading at 26.62. We have not seen much of anything going on at the moment from gold. Very, very quiet. Today, I would imagine, apart from the craziness in the Japanese yen, to be extremely slow. So don't expect any major fireworks or anything from the markets today. Aussie against the yen. So this was the Aussie yen long, obviously. In the afternoon session yesterday, we were trading somewhere around here, I believe. Yeah, that's right. Yeah, so 2 o'clock we were trading at around 99.34, and I was, you know, if and I'm in, would it work? Would it not work? Didn't really have too much confidence in it. As it happens, the bloody thing went up in it TP, so that was quite decent, and happy with that one. Before obviously we get the Titanic scenario happening of the sinking ship, so that was good to get that one in the bag there. Euro Oz is still nowhere to be seen in terms of active trades. It almost did trigger, but frankly, folks, if you have been waiting for this one, if it is a pending order, today is the day where we say goodbye and we remove those pending orders. Okay, it is a Friday. I don't want that one triggering. There's no way on God's green earth it's going to be complete before the day is up. which means leaving it open over the weekend, which is also something I am not prepared to do. So that's that. Euro NZD. So we did have round 2 of this one. Pending order was triggered here. I was about 6 o'clock this morning, and it went straight to stop loss. So that is another one in the bin, unfortunately. So that's a minus 0.25 there as well. So far we're kind of at the break-even point, really. Not break-even in terms of returns, because we're always trading our decent risk yield. But in terms of win-loss ratio, we're at a 1-to-1, which is, yeah, not great, but, you know, it is what it is. All the way down, that one's already done, and that was it, was it? Was that it? I don't think there was anything else from yesterday, was there? And that was our long in cable. I don't know if we covered that one. But the long in cable was really nice. Break a structure trade. That played out perfectly. Anyone take this one? Decent little one. Done and dusted very nicely. Very quick. I think that was it, though. Yeah. Yeah, that was all I saw anyway. That's all that's gone into the track, so there couldn't have been anything else that triggered. And everything else was just set at pending orders, and I've removed them all. So as it happens, or as it stands today, right now, our accounts should be completely cleared of all orders. And so we are going to be market ordering from this stage on throughout the day. If you are here this afternoon and you know you're going to be trading the US markets, excuse me, then you need to be prepared for potential volatility strikes from the PCE, depending on what that data looks like. The European session this morning, before we get into the TA on the US stocks, is not hugely worth talking about. EU50 was completely stationary. The UK FTSE has been very difficult to manage. If we look at the 1 minute time frame here, we've got a lot of choppiness, incredible amount of choppiness. And the only decent run that we've had is from this point here to that point there. And those 2 points are blocked by the 2 anchor points that have just recently happened before it. So the only real clear path of least resistance that we would have had is this margin, okay, of which we are nowhere near completing yet. And we are already at, what, 9:30 or so? Sorry, not 9:30, 10 o'clock. Well, a few minutes to, and 9 minutes. So that's the trade for the UK FTSE this morning, which I'm really not impressed with. We've got the breaker structure here, anywhere entry around that point. Target profit, stop loss where it is at the moment. That's not a bad trade, not a bad little trade. Yeah? Oh, you're in it, are you, Michael? Okay, well done, mate. Yeah, so that's pretty much the only trade I see in the European session that's worth taking this morning. The DAX has been okay. But again, I'm looking at those major inflection points. You know, that's a big one right in there. So I wouldn't want to be trading up into that. The break of structure point below that was here. Okay, 3 touch high. That's a too small margin to take the trade beforehand. So you're looking at taking the trade above. To take the trade above, go up to your daily chart. You're looking at previous price action. There is none because we're trading at all-time highs. So then back down to the 1 minute time frame. You're looking for a fixed 1-to-2 risk reward ratio trade. Fixed 1-to-2. You're going to have your stop loss at the 50% point at those 2 areas in there, and you probably would have actually done it. I was kind of teeing this up to be a failure, but actually in hindsight, you probably would have got a winning trade out of that one. So did anyone take that? Anyone got interest in the DAX this morning? I'm assuming not, because no one said they have. Got him taken out before the move up. Okay, interesting. So where did you get in then? Because from where I'm looking, from 7 a.m. until, well, frankly, until 9, Yeah, until 9:30, there's nowhere to get in. We got. I'll tell you what, though, we do have that base down there, don't we? That's along to the break of the descending highs and attempted previous high. Right, so you've got a descending level. Where is that? So that's that low there. And then you've got the next low here, which is the low before the breakout. So that is your descending level. So you've put that in from this area, going down to that one and that one. Our chart looks way different. That chart looks way different. So that looks like it should go down to like here. So that's your descending level. So then if you've taken a breakout trade in there. Yeah, I see what you're saying. So you would have got taken out on that nub. So to get your 1 to 2, right? Yeah, the provider's probably different, but the BCR still happens where you've drawn it. Yeah. So you got the BCR, the descending level. You got the breaker structure. I understand that part. And then you've been taken out on this, on that low there. Is that right? Yeah. Okay, cool. Yeah, I get that. I understand that. Still, though, I wouldn't have. I mean, did you? So when you were thinking about this, did you think, or did you sort of, did you look at this, right, and think, okay, that is actually quite a significant level because of the fact that we've dropped from 1929.20 all the way down to the low here of 1924.8 or 248. Because obviously we didn't have access to that information, right? So this is the information that we had access to. So if I'm looking at this information, that's all I've got access to at that present moment in time, I would have certainly been looking at this as the point of liquidity. Lows and the previous high from yesterday night. Yeah, no, that's cool. That's cool, mate. And Michael, you were looking to trade the range. Yeah, that's a fair shout as well. I can understand that, trading the range, yeah. Okay. Oh, that UK FTSE would have bust. Well, regardless, I do think the European session this morning has been a bit crap. So, I wouldn't be hard on yourselves about, struggling with it. I think it's been a little bit of a struggle all week, frankly. My the funds, I tell you what, the funds win-loss ratio now is down at 58% odd. So we're seeing week on week drop in win-loss ratio. Yeah, so that's that's a real sign, isn't it, of how things have been recently. Because I mean we were 61.5, 62%, and we've been dropping 1%. It feels like every week, well, maybe a little bit more than 1%, over the course of the last 3 weeks, leading up to the end of the quarter, which I don't think is a coincidence anymore. So, yeah, certainly not been smooth sailing. So, let's have a look at these US stocks then. Frankly, from where we are at the moment, I mean, it's very difficult to say. I mean, look, at the end of the day, I am going to come out and release the US market breakdown for this afternoon anyway at 2 o'clock, so you guys have got access to that, because I will be participating in the US markets this afternoon. I think the PCE's probably a opportunity more than anything after quite a few inconsistency. I think it's an opportunity to probably get something done, hopefully, this afternoon, so I will be looking to trade that. looking at the US markets at the moment, it's kind of null and void. It's not much going on there whatsoever in terms of the price action, so haven't got too much more to say on that front. And the FX space, I'm not going to be talking about anyway because, well, nothing to say on it. I think at this moment in time, we really need to consider the fact that I think we really need to consider the fact of just being patient. The markets at the moment are not in a good place. They're not really trading into or away from any major points of liquidity. They're just kind of trading in dead space. A lot of flip-flopping. A lot of flip-flopping. All the kind of price action I don't want to be getting stuck into. I mean, I would have loved to have got stuck into that. Honestly, that would have been great. But I'm never going to call that ahead of time, are you? Yeah. Okay, guys. Well, yeah. I mean, I don't really have too much more to say at this stage. So I'm probably going to wrap things up there. Unless you guys have got any questions. Obviously, I don't mind answering anything you guys want me to look at. But if you're all kind of at the same thought, then we'll call it there. And I'm going to be active today, obviously, and this afternoon. So I'll be sending out the reports for the US stocks and doing that. But I think at this stage, it's just about taking a foot off the gas a bit, to be honest. More downside to the yen. I mean, look, at the end of the day, the yen's moves at the moment are entirely fundamentally driven, right? So it's impossible for me to answer that question. That is the same question is, are the BOJ going to manipulate the market more? Are they going to flood the market with US dollars, driving dollar demand down and increasing demand of Japanese yen? That is the question that we're all asking. So it's incredibly difficult to ask. It's incredibly difficult to answer that at the moment. I think if we stick to what we know, we will be okay. I mean, what we know is never going to save us from that happening. It's never going to happen. But if we're looking at sort of points of interest, we know that this is a pretty decent floor in the USD yen at the moment. We know that the USD yen is finding a floor here because we've seen it. So therefore, we can look to trade the yen back up if that's the thing. Or we can work out a decent break of structure area for a continued short. So for example, this pound yen looks a little bit nicer than the dollar yen, to be honest. But I mean, for example, we could wait for the pound yen to trade all the way back down to here. And if it trades back down to here, then we can look to buy back into it with the trend. Or alternatively, we can wait for a break, close and retest of 190 and trade it low back down to about 186.50. But anything that we do with the Japanese yen at the moment should be treated as high risk. Anything. Okay. Cool. Well, I hope it works out. But yeah, well, guys, I guess I'm going to wrap things up there. So we are currently at 10:05. I know it's not really been an action-packed session this morning. To be fair, it's not been an action-packed week, and cyclically speaking, it is not an action-packed month. So it all just needs to blow over. Excuse me, and then we can start our journey into Q4 of 2024. Hopefully, where we will see increased trading volumes, at least for a couple of months up until the winter period and Christmas months and stuff, where things should then die down yet again. But we've got about, I would say, 6 weeks of really decent stuff going on before we get to the Christmas months. Obviously, we have Trump-Harris presidential election. We've got the continued inflation, interest rate / recession scenario going on in the United States. We have the situation with the UK as well. Geopolitical tensions, rising all around the world. Putin redrawing the lines now on nuclear warfare and stuff. We've got Biden and Starmer talking about impact of losing long-range missiles in Russia and Russia retaliation and what that looks like for our nation. I mean, it's real crazy, and things are definitely going to be heating up towards Christmas. So lots of things to get focused on, and it's going to be a real busy period for us. So I think we should probably be looking at this as an opportunity to take our foot off the gas a little bit and prepare for it, really batten down the hatches. So I'm going to wrap things up there, guys. Have a really good day today. I look forward to catching up with you later on. I will, of course, be providing a US stock market breakdown this afternoon as well at around 2 p.m. So stay tuned for that. And have a great weekend, guys. Have a really good couple of days away if I don't speak to you again. And I look forward to catching up with you on Monday. Yeah, no worries. All right, have a good one, guys. I'll see you then. Cheers. Bye-bye.